Stocks holding on to good gains this morning. We got Tesla up 2% right now. Tom White's here with me to look at the EVs and do some trading in Tesla shares. And Olivia Blanchard joins us, device practice lead at Futurum. Good morning, Olivia. Welcome back to the show. Tell me about the last couple weeks and how this sets us up for some of the big tech stuff you guys like. Is this like a buy hand over fist fire sale?
Oh, wow. Well, thanks for having me back. Yeah, it's been an interesting few weeks, to say the least. So, there's a lot going on. There's a lot of uncertainty in the market, so we don't exactly know, what the enterprise is going to do, buying devices and investing in data centers. We have a lot of big projects to repatriate a lot of chip manufacturing to the United States. We have tariffs. It's been an exciting few weeks. So within all of this, what we're obviously really interested in is how this impacts tech stocks and the outlook for tech companies. So I think that data center, PC devices, mobile, all of these are still on trend. We're still good. Everything is still very much driven by AI. It's obviously more of an opportunity than a risk. It's also more of an opportunity at the end, and more ROI than a cost. So I think that that's going to keep driving the market forward towards anything that has AI in it or attached to it, right? Having said that, the automotive market's a little bit different. There's obviously an AI component with automated driving, but between tariffs and really tough competition and boycotts against Tesla, we have a slightly different view of the automotive and the EV market as a whole.
Okay, so break that out for me, and I appreciate you taking us through the rundown there. I love that. The part of this also, too, is the China versus U.S. thing, because in the last couple of weeks, everybody knows international stocks have been doing great. Chinese stocks are doing really good. I do wonder if maybe while their market firms up and generally the rest of the world becomes appealing, if that'll take any of the pull away, because they've got some pretty good tech over there.
They do, yeah, and their automotive stuff is really solid, as Tesla's finding out.
Exactly.
So yeah, to kind of set this up a little bit, there are two things happening at the same time. On the one hand, there's a backlash against Tesla, which is more of a political thing, and we'll see how long that lasts or if it sticks, right? The other thing is just competition, just straight up competition in China. BYD is introduced some really exciting models with some really good tech. They make really good cars for a lot lower price than what Tesla sells theirs for, right? And there's not a lot of margin for Tesla to kind of retreat into to be able to compete at the same price points as BYD. So there's already that. And BYD has roughly 15% market share in the EV market in China. Tesla has barely 5, right? The other thing is Tesla hasn't really released a new model in a while, and we've been promised all these different new models from Tesla, all these robotaxis, all these things that aren't really happening. So what I noticed today is Tesla's up a little bit on news that it was finally going to be releasing a new Y series model in China. I think that's interesting. It's not much of a bump because, again, Tesla's market share in China is so small that I don't think it's significant enough to get past like the 1.8% or whatever that I saw last time I checked. So I think that's what's happening. It's competitive dynamics more than it is anything else for Tesla specifically.
Very good, clear case there. Olivier, so when you look at kind of the investment trade-off, if one just wants EV exposure, because I think there still is a pretty good argument that the penetration rate is just going to go up basically continually over time, you would think, as tech improves and et cetera, et cetera. Should it be more balanced then than as it was maybe the last 7 years, which pretty much all you had to do is be in Tesla? Does it need to be more balanced now? Do you need to bring some of the China stuff into that side of your trade?
Yeah, I mean, diversification is always good, right? You don't want to put all of your eggs in one basket. So, and in this case, I see, a lot of strength in the Chinese manufacturers. What generally what you're seeing with the market is just EVs are actually working well, right? Like the growth is strong. It's plateauing a little bit, not completely, but definitely you're seeing a slowdown in the rate of growth, not a slowdown in net growth. So there's a little bit of nuance there. But we're seeing essentially Tesla losing market share against all of its competitors. So it's still selling cars. All these car manufacturers, like Li Auto, reported earnings today. Even they struggle a little bit. They kind of missed on some of the expectations, but it's still a positive outlook, right? They're selling more cars. They're growing year over year, quarter over quarter. It's just their margins are getting a little bit thinner because competition is getting so much tougher, and it's harder to maintain that market share because there's so many players in the market selling so many cars. And I think that's kind of the problem that Tesla is dealing with is they haven't found that path to maintain the market share, that first mover advantage that they have. They're just sort of being swallowed up by the rest of the market.
Great stuff, Olivia. Great context and good breakdown for us here on a really interesting situation with the competitive nature of Chinese automakers and the fact that they can do seemingly a lot of things we can for cheaper. Appreciate that. Thanks, Olivia. Tom, how do you want to trade Tesla here?
Well, I got a couple trades, one for the bulls and one for the bears.
Yeah, pull me up.
But taking advantage of that higher implied volatility. So first one, you don't want to be overly aggressive, I think, in this name just due to the 50% drop that we've seen in the shares. You want to take advantage of higher implied volatility. So first one's neutral to bullish in nature, just real short-term positioning. 3 weeks to expiration, April 4th, weekly options. We're going to sell an out-of-the-money put vertical. We're going to sell the 225 strike put and then buy the 205 strike put. So a short $20 wide put vertical, neutral to bullish. You're going to collect roughly about $4.50 to $5 on that thing.
Okay.
So that's going to take your break even down to about $2.20.
That's worth my time, $4.50.
Right. That's a 10%,
I don't mind that.
10% cushion to the downside. So you're taking advantage of that higher IV, right? Implied volatility percentile is at 65%, so you're basically in the top 1/3 of implied volatility levels that we've seen over the last year, and we've seen a lot of volatility in Tesla. But this might be the way to take advantage of that high IV if you still are bullish. You think this stock's going to rebound from the recent slide that we've seen.
All right. Sell some downside for almost $500.
Yeah.
I don't mind that. It's a buy-in at the 2.5 table. What else you got?
On the upside, call side, a little bit more neutral. You can still make money if the stock consolidates, but you can make money if it goes higher. Okay. You just don't want it to explode back above a specific level. Yeah, so we're buying a call butterfly in that same April 4th weekly cycle, so 21 days to expiration, but we're taking a big credit on it. And that's the key component of this strategy. You're taking advantage of the higher implied volatility level. So buying one of the April 4th weekly 265 call, selling two of the 270 calls, and then buying one of the 300 strike calls. You're going to collect a credit of around $4.50 on that one. So that means it takes your break even up to $279.50 over the next 3 weeks. That's about 13% above the current share price, that break even. You can see here from the risk profile, if the stock goes lower or stays where it is right now around 245, then you just get to keep that $4.50 credit that you collected. Now, if it grinds higher, goes towards that short 270 strike where you've got two options short, that's a little kicker, right? You can make a little bit more. You just don't want it to explode above that 279.50 level at this point on this type of strategy. Anything below that's going to be profitability with that little kicker at or near the 270 strike. So even if you get a little bit of a rally, you make a little bit more than if it just stayed here or went lower.
Okay. Unfortunately, Tesla's the one getting kicked right now.
Yep.
Just pulled back from 251 to 244. Yeah. So $7 pullback in Tesla.